most powerful and most important levels of structure that give you the best chances of banking in massive profits. In just a few moments, I'm going to be sharing with you guys some extremely valuable information that could be what you've been missing in your trading all along. So if that sounds interesting to you, then go ahead and click that subscribe button, click the notification bell. Welcome back, guys. So first off, let's actually talk about why you should be interested in learning how to identify these powerful and important levels of structure. Well, for starters, here we are on the Euro-Yen daily chart. And on this chart, using exactly what I'm going to teach you today, would have banked in over 800 pips on this move right here. We also would have banked in over 600 pips on this move right here using this analysis. And we're actually coming up on a possible short trade using this analysis at the moment, but we'll discuss a little more about that later on in the video. And we'll also be taking a look at this on multiple time frames and multiple different pairs. This is not something that only works on the daily time frame, and it's definitely not something that only works on a specific pair. This is just knowing and understanding market structure and how the market moves. So let's go up to a blank chart. So let's discuss a little more about structure. Let's imagine you're getting on a plane and you're going from Atlanta, Georgia, all the way to California. And I know you're probably thinking, what does this have to do with structure? But I promise it's going to make sense in just a moment. Let's say you start to take off here in Atlanta. As your plane's on the rise, you hit small amounts of turbulence on the way up, small amounts of turbulence on the way up, and then the plane drops 500 feet out of the air before taking back off again. And it does that once more. Tell me something. In this scenario, are you going to remember these tiny little moments of turbulence? Probably not, right? Will you remember these very large drops and moments of turbulence? Yes, you're going to remember those, right? Well, this is exactly how the market works as well. In order to spot major levels of structure, we can't be looking at these little tiny pullbacks that would be the small amount of turbulence you would hit on your way up to cruising altitude in a plane. What we want to be looking for is spots that the market's going to remember. Again, imagine it as a plane. What are the spots you would remember of turbulence if you were taking off an airplane? You want to find those areas, and that's where you want to draw your resistance and support lines, right? These are going to be the major and powerful levels of support and resistance. And we're going to discuss a few other conditions that we're going to apply to this as well. It's not just the fact that we have large moves down. Something else we need to pay attention to is the fact that in a trending market, trending being higher highs and higher lows, the very most important level of structure in a trending market is always going to be the most previous level of structure that was broken, right here. So if we have a trending market, the most important and the most probable area you have to find an entry reason and capture a winning trade that's going to equal massive amounts of profits is right back at the previous level of resistance. Now, just implementing this could completely turn your trading around. This can completely change your trading. And why, you might ask? Well, because before now, you've probably been looking at tons of different structure levels in order to try to figure out what's major, what's minor, how are we going to trade around it? Well, what if you only looked at previous structure resistance that was just broken for possible support? How much more simple would your trading plan, would your strategy be if that was the case? Exactly. So, not only this, but we're also going to implement, and what I'm also going to be teaching you guys today is how to spot very important levels of structure that happen after consolidation. So, the most important for a trending market, of course, is the previous level of resistance that was broken. Let's say we have an uptrend. The previous level of resistance that was broken is going to be the most important and most powerful level of structure we can find. Now, let's say we're at our cruising altitude, hit a little bit of turbulence up here. That's probably enough of the airplane analogy, honestly, so we'll just continue here. But then, let's say we get this drop right here. If we were using the airplane analogy, we're heading down to the landing strip. After this drop, something we can pay attention to. Again, we're looking at the most recent level of structure that was broken. What's the most recent level of structure broken? Right here. But here we have even more power, an even more important level of structure. The reason being because this was previously a level of consolidation. We have multiple touches in this level, so once the market breaks through that, that's going to be a very accurate, a very powerful, and a very important level of structure to pay attention to for trading opportunities in the future to push the market down. And as we go into trend, what we're going to be looking for is just the most previous, nothing else, only the most previous level of support that was broken in a downtrend. So once we have that most previous level of support that was broken in a downtrend, we can place a horizontal line there. You can just watch it on your chart, wait for the market to get there, provide you some kind of reason for entry, and push back down. Now tell me something. Would that be a level of significant structure? Would that? No. These two levels would not be significant. You would not remember that as turbulence if you were coming down to the landing strip on your plane ride. And we actually need rules to try to define these, right? Or at least outlines of what these smaller levels are. We need outlines of what we can actually count as major structure support and resistance. The way I like to do this is if these little areas are 2 or less candles and they do not retrace a very large amount, let's say more than 38.2%, this way you can actually use a Fibonacci. So if this right here is not a 38.2% retracement of our high to low move and it's less than 2 candles, then this would not count as structure. So that's just a brief overview of how you would create rules for that. That's not something we're going to dive into in this video. It's a little more complicated stuff that we discuss over at the EAP. So I know that may have been a little bit drawn out, but hopefully now you have a really good understanding of what we're going to be looking for in today's video and how we're going to be spotting these important and powerful levels of structure. Now we'll go down to the charts, take a look at a few live examples of this, and later on in the video I'll be showing you guys an indicator that you can combine with this analysis that can increase the probability of hitting these massive trades even more. So make sure to stick around till the end for that. Let's go ahead and go down to some live charts and take a look at a few examples. Okay guys, so here we are back on the Euro-Yen chart, and now we're going to discuss this analysis once more, now that you have the knowledge we just discussed with our airplane analogy. But before we